Hi, I'm Max Keiser. This is the Keiser Report. The response has been overwhelming. People are demanding 4 Max and Stacy's per week Keiser Report.
And, you know, as we continue with the lockdowns and the bailouts because of the lockdowns from the coronavirus COVID-19 pandemic situation sweeping the world, fairness is what justice really is. And that was a quote from Potter Stewart, who was a Supreme Court Justice. Remember, Sandra Day O'Connor took over for him afterward. Fairness is what justice really is. So as we look at these bailouts and the lack of fairness that we've seen since the interventionist Fed days, so say 1987 when the plunge protection team and Alan Greenspan came to the rescue of the bad bets made on Wall Street in Chicago. And ever since then, we've had a more and more and more unfair system. It starts off a little bit unfair, and as we see like a little change of direction way back then in history, becomes a huge gap. We see that with the wealth and income gaps, and we see that with every single crash and the subsequent bailouts. It gets worse and worse towards the very wealthy and the connected. So when we've already covered the trillions going to the banks instantly, and the fact that the ordinary person is struggling to, waiting desperately for these stimulus checks to arrive to them, the measly little ones. You know, when the Fed is buying these collateralized loan obligations, you have to realize that 81% of them are owned just by JP Morgan, Wells Fargo, and Bank of America and Citibank. Just those 4 banks own 81% of it. So those are the guys getting bailed out by the Fed. In the meantime, U.S. housing, JP Morgan Chase to raise mortgage borrowing standards as economic outlook darkens. It just got harder to buy a house. From Tuesday this week, customers applying for a new mortgage will need a credit score of at least 700 and will be required to make a down payment equal to 20% of the home's value.
Well, this is an interesting concept, one of fairness as it relates to the economy. And it's not really baked into the American system. It's not designed to be fair, because fair is what is fair for one person is unfair to another person, and it's a highly subjective term. What America relies on is free market capitalism, and it relies on competition, and that if you are successful competing, then you succeed. And remember, in America, possession is 9/10 of the law. Now, if you don't compete successfully, then you get thrown out of the game, basically. But that's the way it is in the United States. And having said that, when you talk about banks being bailed out by the Fed, and you talk about all of the high-yield bonds being owned by the major banks, and they are being bailed out, that's clearly unfair. But the response can't be that we need to institute more laws, because we already have laws. They're breaking the laws. In the case of this SPV with that high-yielding ETF JNK, they broke the law. So fairness implies, and a justice said this, and he's part of the judicial system of courts and laws. If breaking the law is without penalty, then it doesn't make sense to introduce new laws.
In terms of the fairness, okay, these banks took on bad debts that mostly in the fracking sector, and they were doing their part, because remember, Time magazine said America, the Saudi Arabia of America, essentially, that we're #1. Remember, we're #1 energy producer. Well, that was because of all the patriotic investment from these banks into the fracking sector. They lost money the whole time, but they were doing it for patriotic reasons, and they were getting paid the yield, right, during these low interest rate times. And they were made a bet, a gamble, that this risk would pay off. Well, it didn't, and now the Fed is bailing them out. The same thing happened, especially since the financial crisis of 2008, is the ordinary American said, well, I need to re-educate myself. I need to retrain myself and, find a way in this knowledge economy, go get a degree. Okay, it's going to cost $150,000, but you know what? I'll be able to get a job with that. So they racked up $150,000 debt when they graduated from university, and lo and behold, it all falls apart. JP Morgan, Wells Fargo, Citibank, Bank of America have their bad debts bailed out. The same ordinary 340 million Americans go, oh, Cool. So thankful for my government and the central bank bailing out our bad bets. Here's my bad bet. Sorry, we don't have enough money for that. So they feel like, the ordinary person feels like this is unfair somehow, that Jamie Dimon's bad bets get bailed out over and over every single time it crashes. My bad bets never do.
Yes, and that's why on this show with Keiser Report, we have put forward the notion that you will never achieve fairness in the economy that's based on fiat money if it's controlled by banksters and central bankers who can print 10,000 for them and 1 for you. And they are free to break any law they want. The only riposte is Bitcoin and gold, particularly Bitcoin. Bitcoin disenfranchises and decapitalizes. I'm not for decapitating anybody, but I am for decapitalizing all the Wall Street bankers by shifting the center of gravity of money from the dollar and fiat to Bitcoin. And that's perfectly within our purview, within our scope as global citizens who wish justice through free competition and hard money. That's the only justice that matters, that's sustainable, that's real, that doesn't rely on politicians, venal politicians that are so easily bought. And no politician is easier to buy in the world than the American politician. You can get a law changed in America for $100,000. European countries, it costs a lot more to bribe a politician than America.
Regarding this JP Morgan policy of making it more difficult to get a mortgage, here's what a former manager at Goldman Sachs says. JP Morgan made it harder to get a mortgage today, raising borrowing standards to 20% down with a credit rating of 700 plus. That's interesting because Boeing has a junk credit rating, a credit score of 500, and they're allowed to borrow billions from banks and government. A revolution is coming.
Well, it's amazing, put into context of, again, central banking, because central banking was supposed to be the lender of last resort. And central banking was a buffer to the system. So in moments of extremis, like a pandemic, it should be easier for people to borrow money and to acquire or to preserve wealth or to buy a house. But instead, it's become more difficult because the banks and the central banks are heading toward neofeudalism. And we'll talk to Dr. Michael Hudson about that later. Meanwhile, look at the interest rates for credit cards. The money that is borrowed by big banks is zero, and it's sometimes less than zero. JP Morgan at one point last year was paid to borrow money. Every time they borrowed $500 billion, they weren't charged interest on it. They were paid interest on it. Meanwhile, credit cards are still on average 20%. They've never changed. And yet that matrix of interest, starting with the Fed funds, the discount rate, and the prime rate and mortgage rate, should all be moving in tandem with each other. The Fed funds go down. That's the purpose of a central bank. So it shows quite clearly that the central bank is not operating on any level of adequacy, in any sense of what it was chartered to do. It's now been co-opted entirely by the kleptocrats who are simply using it to steal assets by printing money and then buying those assets with the free money they get, and they have no interest attached to that money. Disenfranchising and creating a new serf class or peasant class in America. When you hear about 17 million, 20 million people unemployed, that's great, because we need those peasants to do peasant jobs. But we don't need a middle class. No, not when the $3.5 trillion that's collected in taxes is thrown into the garbage compared to the 8, 10, 20, 30 trillion that's printed to buy out assets on behalf of the kleptocrats.
So remember what I said is, like, it started back in 1987 with a little bit of intervention, and then it goes to a little bit more intervention in 2000, 2001, and then it goes to even more intervention in 2008, and now we're in 2020. And so if you look at this round of global QE is just unprecedented, and you can see this is 2020 versus 2008. A huge difference of magnitude, orders of magnitude. It gets exponential. You're going to see this exponential growth in the assets being taken private, being taken away. We've seen that with the share buybacks. Remember, the Federal Reserve is supposed to regulate these banks, and somebody's supposed to oversee these corporations. And go ahead.
I would like to point out my next billboard.
It's upside down, but that will be interesting to look at.
You can't taper a Ponzi scheme.
stonks go higher. Well, in fact, you see that little tiny taper they tried there?
Yeah.
The little tiny taper, and it caused, helped cause this collapse. We just saw Will Meade of Goldman Sachs say that JP Morgan is toughening standards to the ordinary person, but Boeing is junk rated and they're getting free cash. Well, Boeing is junk rated because they hollowed out their balance sheet through share buybacks, $100 billion in the past 5 to 6 years. And that led to them being unable to build airplanes that fly because they had to fire all the engineers in order to make all those share buybacks. And now I want to point out that something that you've said, because they are getting bailed out, Boeing and airlines and all these other industries that hollowed out their balance sheet through share buybacks. Well, they are being bailed out, and there's theoretically, though there's no way to enforce this. There's no enforcement clause, but they're supposed to not engage in share buybacks now. You say stock buybacks won't stop. They'll be rebranded. My guess is on rebranding is share retirement programs, leveraged earnings programs, opportunity enhancements, earnings efficiency programs. Net result exactly the same as stock buybacks, equally fraudulent.
Right, stock buybacks won't stop. There's some talk on mainstream financial news like, oh, we can't possibly just keep buying back our stock and just use that money to pay ourselves dividends and reward ourselves huge increases in salaries. No, that's very unseemly. So they will rebrand it. And they'll say, well, it's earnings enhancement programs. So on CNBC, they'll say, this week, Berkshire Hathaway decided to engage in earnings enhancement program. And they expect to have an enhanced earnings this quarter. But they won't mention stock buyback by name, but that will be the earnings enhancement program, or they'll call it something else. And the so-called progressive press will never mention it because they don't keep track of this stuff. And of course, Berkshire never paid out on the COVID insurance, even though they're a big insurance company. But all the major stocks in America have puts on catastrophe, so they made out on their insurance. Sucker! Anyway, we're going to take a break, and when we come back, much more coming your way. Welcome back to the Keiser Report. Time now to go to Dr. Michael Hudson, economist, historian, author, and blogger. Dr. Hudson, welcome back.
Good to be back, Max.
Debt Jubilee is finally happening, only it's exclusively for hedge funds and private equity. Your thoughts on the trillions of dollars in bailouts for bankers and corporations?
I think they have a wish list of all sorts of things that their lawyers and lobbyists have drawn up, and they just pulled it out of their pouches and their portfolios and pasted coronavirus bailout on it. But what's bailed out? Disease isn't bailed out. The workers aren't bailed out. The small businesses aren't bailed out. As you say, it's all gone to the major campaign contributors and the donor class.
On Wall Street, laws and rules don't apply. So if Wall Street is caught breaking the law, they might pay a small fine, or they rewrite the law. Here's a good example of it. The Fed's balance sheet has passed $6 trillion, and they've set up an SPV, a special purpose vehicle, to buy a high-yield junk bond ETF. That's an exchange-traded fund with the stock ticker symbol JNK for junk. Now, this was completely illegal for the Fed to do this, but they decided to set up this SPV on the side to bypass the law.
The fracking industry had junk bonds. They were about to go under. You had to rescue, not the frackers, they're not rescued. You have to rescue the investors in the frackers. You have to rescue the bankers and the bondholders. And that's the motto in all of this. As Sheila Bair said in the Obama bailout, it's all about the bondholders.
What about Bastiat, who said if there's looting at the top, expect looting at the bottom? I mean, they're just breaking the law. I mean, if I go into the liquor store and I rob all the money, and then I say, well, no, actually, I put the money into a separate bag held by a banker, and they put SPV on the bag, so therefore it's legal. Why do they think that this kind of example of wholesale law breaking and thievery is good for society, Dr. Michael Hudson?
You know what President Nixon said? When the president does it, it's not breaking the law. And now that Wall Street has sort of taken over the presidency and the financing, when Wall Street does it, it's not breaking the law. The head of the House Tax Writing Committee is a Democrat, Representative Neal. And he has said the first thing he did was go to look at he asked Robert Rubin what to do, and his major backers are the financial sector, the securities and investment, and real estate. So they're simply the Congress has been basically bought out, and they're in the position that President Nixon was in. You can break the law if nobody stops you.
Over there in Japan, they invented this idea of quantitative easing. They've been leading the world in lowering rates down to effectively zero. Their size of their balance sheet on the Bank of Japan is now more than 100% of the GDP of Japan. In America, the balance sheet of garbage that they've bought back from Wall Street to bail them out is about $5 to $6 trillion worth. But the GDP of America is over 20 trillion. So can we expect the central bank to buy another $15 trillion or so of junk to keep the Ponzi scheme going?
The word they use is whatever it takes. That's what the European Central Bank does, and I think that's the motto here. Whatever it takes so that the bondholders and the stockholders don't lose a penny. You saw the largest stock market jump since in 90 years last week when the bailout to the Wall Street, the $6 to $10 trillion program came out. And the idea is that the economy has to bear all of the loss. Labor, small business, and industry, none of the loss should be suffered by real estate or the banks because the law is written by real estate and the banks. And it's amazing that this is not more drawn, the bailout is not drawn in these sharp terms. It's really black and white. You can't bail out the banks and maintain all of the debts that should go bad because obviously a lot of companies are going to go under, and at the same time bail out the economy. Something has to give, and nobody's making that unpleasant calculation.
Deutsche Bank says that there's no such thing as a free market anymore. Goldman Sachs said something very similar last week when they recognized that the stock markets had hit bottom because of the Fed and the Jerome Powell put, which of course is a continuation of the Janet Yellen put, the Ben Bernanke put, and the inventor of the central bank put, Alan Greenspan. The idea that they're in the business of keeping the Dow Jones going higher, not in the business of protecting the purchasing power of average Americans. But my question is that progressives, they have been saying that the solution to this capitalism problem is socialism. But the capitalists are saying capitalism doesn't exist anymore. Free markets don't exist anymore. So where does that leave us, Dr. Michael Hudson? We're not in a capitalism anymore, and we're certainly not in socialism anymore. What system are we in exactly?
It used to be called state socialism in the late 19th century, when you had Germany have a kind of three-way integration between the government, the military, and heavy industry, and the banking. And you have something similar today. The question is, socialism for whom? Will it be socialism for the 1%, socialize the losses, or will it be socialization for the 99%? You socialize the gains and spend money into the economy to maintain living standards and wages. Well, obviously, we've gone beyond industrial capitalism into finance capitalism, and finance capitalism has to gain control of the state in order to bail itself out, to sort of artificially inflate stock and bond prices. So what we have today is asset price inflation, and at the same time you have wage deflation and deflation of prices, consumer price deflation. So there are two economies and two price indexes, one for the 1% and their assets, and the other for the economy and their wages and the prices they have to pay.
Now the U.S. budget deficit is due to hit $3.8 trillion, or 18.7% of GDP, on top of the trillions being created by the Fed. It appears we have MMT, modern monetary theory for the bankers. People are asking why they even need to pay taxes if the government and Fed can print so much money. And are we ever... So, here's another idea you've been talking about, MMT, It seems to be, the banker said, yeah, I like that idea, but only for us. We're going to steal Dr. Michael Hudson's ideas, and we're going to create it for our own private fiefdom.
Well, that's the irony that the founders of MMT, from the 1950s down through Hyman Minsky and all of us at the University of Missouri at Kansas City, we all wanted to use the government's ability to run a deficit to spend money into the economy, to push up to achieve full employment, to raise living standards, to finance public infrastructure spending so that you wouldn't have to privatize it, and to basically help the economy grow. And this was all attacked by the monetarists until they said, wait a minute, if you can create money for the people, you can create money for us, the 1%. And the 1% looks at the economy, industry, and the people as overhead. All these people just sort of wanting our money, just to live on, when the money really should be for us and for our wealth.
Workers who are getting sub-living wages in meatpacking or in delivery services or gig economy are now in a position to raise their wages. Okay, now you've got a long history in Minnesota in just such kind of worker activism. Are workers at a point where they can start to bring back organized labor and bring back wage, the power of collective bargaining, or are they going to blow it?
They're certainly motivated to, simply over the issue of workplace safety and protection against the virus, and the fact that they're being laid off at will by the employers with really no backup. So you'd think that the whole health plan, the points raised by Bernie Sanders are certainly going to catalyze this. And if they don't organize, it means that they're just going to surrender quietly and make the economy end up looking like Greece. Everybody is poor and poor. They get unhappy, they commit suicide, or they emigrate, and their lifespan's shortened. That's really the alternative. They simply cannot live. Imagine what's going to happen in 3 months when all of a sudden they haven't been employed. All of the rent that's been in abeyance is going to fall due. And the restaurants and small businesses they work for can't afford to open because they can't afford to pay the rent, which is their largest expense, for the last 3 months while they've been shut down. They're going to be wholesale unemployment. Homelessness will increase. If this doesn't trigger people acting in their self-interest, I don't think anything will.
My theory, the Max Keiser theory of neofeudalism, that we are returning to a state of a feudal political, socio and economic model where you've got now peasants and oligarchs, and that's it. And certainly the banking oligarchs are just being, flooded with trillions of dollars, and people can't pay rent anymore, and they're going to be forced to a subsistence living of clicking on ads on Facebook for a protein pill. In your vast knowledge of economic history, et cetera, is this a possibility that we end up with a neo-feudal model going forward, Dr. Hudson?
I think that's exactly the model. The difference is that in feudal times, it was the landlords, the descendants of the military conquerors who invaded England and Europe, who ended up with all of the surplus in the form of land rent. And today, the role of the landlords in the 19th century has been replaced by bankers because rent is now being paid essentially by mortgage interest to the bankers. And the idea is that debt should be increased up to the point where all that leaves left is the minimum expense of living. Now, unlike serfdom and feudalism, the rent payers, the rentier payers, can live wherever they want, but wherever they live, they're going to have to pay mortgage interest to buy a home for 2/3 of the population, or they're going to have to pay rents that cover the mortgage interest paid by the absentee owners for their mortgages. So we have a mobile population. They can live everywhere they want, but at all the money in their paycheck, over and above what the basic living costs of food and clothing and transportation, are going to go to the financial, insurance, and real estate sector, the fire sector, in the form of debt service, rent, various forms of insurance.
Because the serfs didn't have to quarantine, you could argue that they actually had a superior lifestyle. Anyway, Dr. Hudson, thanks so much for being on the Keiser Report.
It's always good to be here, Max.
All righty, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I'd like to thank our guest, Dr. Michael Hudson. Look him up. If you don't read his books, you probably don't know anything. If you want to catch us on Twitter, it's Keiser Report. Until next time, bye, y'all.